always says to me, but are they right? Like, in other words, is it a feeling, or are they really not getting those juicy opportunities? Like, I am just curious, right? There's a feeling, and then there's the reality. And it seems to me that the reality is that they're not getting those opportunities. What do we know on that front?
Well, I think there's a few things. One, not all LGBTQ plus employees are out at work. So it isn't necessarily something that you can measure as easily as you can, for example, gender identity, which people tend to be a bit more forthcoming about. So that's one piece. So you don't actually have all the data. The other piece is, I think you have to be able to explain, do you have the policies? Are you making for a respectful and safe workplace for everyone? Do you offer role models? And I'll give you an example, because it is an important piece for people to not only have affinity with peers and other colleagues and allies, but it's also really important. We've heard the old adage, you can't be what you can't see. I would say, speak for EY, that, we're no stranger to having diverse leadership. And it's really important for us to have out LGBTQ plus leadership, and we do at the country levels, on our management committees, on our boards, on our senior client serving capacity. And that really, really makes a difference, so that people can see, yes, you can advance to the highest levels within an organization. And I think that's particularly important, especially when people are seeing the workplaces around them actually retracting in some capacity, or feels like they're retracting.
So how would you advise companies? Because at the end of the day, that's what EY does. EY advises companies. They have a roster of clients. You tell them best practices when it comes certainly to all aspects of business. How do you advise companies to shift at work, given what you found in your research?
Yeah, I think there's a few things. Tone at the top is critical, meaning that you have to have ironclad support for your commitment in this area. And that doesn't mean you have to do everything perfect, because none of us do. However, you have to be authentic, and not just during Pride months, which can vary around the world, meaning 12 months out of the year that you have consistent commitment and tone at the top. Accountability, holding yourselves responsible for that. Also pretty unsexy things, Carol and Tim, like policies, but that show employees that regardless of where you work, like at EY, we will offer you a safe and respectful environment, and that is our commitment. The other thing that you can do, which tends to be a little harder, is making sure that your systems are equitable, and that your pay equity systems are equitable, your promotion systems. And then the last thing that many companies, I see around the world that do a nice job of this, is offer affinity groups, and those. Those are not a LGBTQ plus strategy, but they're a huge enhancement. For example, we have them in 77 countries, and we have, thousands of employees that belong to these networks. And that offers people not only role models, but it offers them the ability to share and have voice to leadership, so that it goes in two ways, not just with each other, but up through management. And we've found that to be really, really helpful in guiding our level of authenticity in this place, in showing our support.
And I'm always, one of the things that comes up, whether it's affinity groups or just groups overall, like, what you want is everybody to be a part of the whole, right? And you want to be careful about not dividing everything up and keeping people, yes, into a group where they feel supported, but you want to make sure that that group then is, certainly a part of the bigger, broader organization. So is there an understanding of that? Because sometimes I think companies will set up a group or something, and then it's like, okay, done, we did it. Like, we're helping out a group, right? The importance is making sure that they're a part of the whole.
Yes, absolutely. And you don't want to be an isolated group. So there could be some benefits, of course, to having, a similar topic and a similar concern, or things that you're working through. Absolutely. But you need allies in that, regardless of the demographic group. But to your point, you also need to, this is not about fixing LGBTQ plus employees. This is about fixing environments and making sure that environments are as equitable as possible. So another example that you could consider to do is inclusive leadership behavior types training, which doesn't focus on people's beliefs necessarily. It focuses on how they behave in a workplace and how they could be a most inclusive colleague and team member to all of their employees. And we found that's been very beneficial to us in inclusion overall and belonging overall for everyone.
All right, going to leave it there. Hey, Karen, thank you so much. Karen Tornight, she's Global Vice Chair of Diversity, Equity, and Inclusiveness over at EY, joining us on this Monday in New York. All right, we are just about 28 minutes away from the closing bell on this Monday, and we continue to see this trade of very much kind of flat on the S&P 500, NASDAQ a little bit lower, Dow going in a different direction, but it does feel like a little bit of a break here in the run-up that we've seen as of late.
S&P 500 just completely flat right now.
Yeah, exactly.
It's orange. It's not red. It's not green. If you look at the terminal right now, it's orange. Yeah. That's what happens. It's flat.
That's right. It's flat. All right, folks. Right now, let's get a check on world and national news. There's a lot going on when it comes to that front. Let's head to Amy Moore. She's in D.C. Hey, Amy.
Hey, Carol. The Supreme Court has signaled it's taking an unusual step, extending its term into July as it finishes up work on about a dozen cases. That includes Donald Trump's bid for immunity. Now, the court, which had already scheduled Wednesday as an opinion day this week, has now updated it to show it will issue rulings on Thursday and Friday as well. And this fall, the Supreme Court will take up the controversial issue of gender-affirming care, agreeing to review a lower court decision that upheld laws in Tennessee and Kentucky banning sex transition surgery and treatments for children and young people experiencing gender dysphoria. Emory University law professor Fred Smith says the issue comes down to this.
Whether or not, from a constitutional privacy standpoint, an equal protection standpoint, a state is allowed to kind of override medical judgments and tell families whether or not they can receive medical care consistent with their doctor's best judgment.
Emory University law professor Fred Smith. Now, the last time the Supreme Court took up transgender issues was in 2020. They said it was illegal to discriminate against gay, lesbian, and transgender people in the workplace. The court will hear arguments in this case this fall. Former President Donald Trump's attorneys are arguing the classified document case against Trump should be dismissed because the prosecutor was improperly appointed. Legal experts say that is a long-shot argument, claiming the Senate should have approved the appointment of special counsel Jack Smith. District Judge Eileen Cannon has scheduled several hearings on the issue for today and tomorrow, and this has all delayed Trump's federal cases. Judge Cannon has also indefinitely postponed his classified documents case, the one down in Florida. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow higher, S&P little change, NASDAQ in the red. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are trading mixed amid the weakness in tech. The Dow is currently up 304 points. The S&Ps are down 2, while NASDAQ is down by 0.7%. The U.S. 10-year yield at 4.25%. Gold is higher by 11. Oil is climbing. And Bitcoin, that's sinking by 5.4%. Among the main 11 S&P sectors, leaders were energy and utilities. Only tech and consumer discretionary were in the red. And leaders to the upside in the Dow, Goldman Sachs and Amgen, while Salesforce, Amazon, and Home Depot each fell 1% and led to the downside. In the chip space, NVIDIA fell as much as 6.5%. And regarding the banks, the Federal Reserve floats a weaker version of the bank capital overhaul. Wrapping things up, DuPont's water unit is said to draw interest from potential buyers. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg. Type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just about 18 minutes to go until we wrap up the trade on this Monday. Our Alexandra Semenova writing, the U.S. stock market pouncing from one all-time high to the next, but below the surface, she says a waning share of stocks is participating in the advanced spelling potential trouble ahead for equities. So, Tim, she writes, bifurcation between the S&P 500 performance and breadth has reached one of the worst levels in 3 decades, according to Bloomberg intelligence data. The only 2 times since 1995 it's been as extreme as now came before drawdowns for U.S. stocks. So just something to think about.
That's really good. Introductory remarks, I should say, for our next guest, Emily Rowland, who's co-chief investment strategist at John Hancock Investment Management. And that's because, Emily, you say that, hey, it's been a good run. That's the good news. The bad news is likely to start to mean that bad news for markets soon. So it's not going to be like, bad news is good news. It's like bad news is actually going to be bad news. What is the evidence for this shift that you write about?
Yeah, so thanks for having me this afternoon. So we are seeing the labor market shift. You look at some of the data that's come out as of late, initial claims rising over the last couple of weeks certainly isn't great news. We're finding that it's harder to get a new job after you lose one. Job switching is not resulting in wage gains the way that it has previously. So we're watching closely for this next jobs report to see signs that picture may deteriorate more. We're also seeing inflation slowing. Right now, that's a great thing because we have to remember that inflation was awesome for corporate profits, especially for companies with a lot of pricing power that could pass that along. It actually resulted in record revenue growth, but that inflation impulse is fading now. And we're seeing it in things like used car prices falling. We're seeing retailers actually start to make cuts. There's a few articles on Bloomberg today talking about fast food chains actually starting to cut prices here even. So we're seeing it at the high end, we're seeing it at the low end. Of course, housing is that last piece of the inflation picture that's really critical here. Housing is a huge component of CPI. And even though we're starting to see some cracks in the housing market, things like housing sentiment we saw last week are slowing, building permits, new housing starts slowing, house prices are still up. They're up 6% nearly on a year-over-year basis, which is pretty remarkable and shows the resilience of the housing market. So we need to see that inflation data come down on the shelter front in order to see the Fed start to cut. But remember, when inflation's slowing, that also means growth is slowing, margins are compressing, and corporate earnings are going to come down. So a long way of saying that this bad news ultimately is not going to be great for corporate profits.
Right. We also have Fed Bank of San Francisco President Mary Daly. She's warning the U.S. labor market is nearing an inflection point where further slowing could mean higher employment. That's our news story right on the Bloomberg. At the same time, Tim and I talked at the beginning of our broadcast about our Liz McCormick story about how long can high rates last. Bond markets say maybe forever. So I do wonder about what that means for the investment environment. So tie it all together. First of all, real quickly, recession or no recession then? Or earnings recession or no recession? What are you expecting?
We do see a contraction ultimately unfolding just the way it always has. We think there'll be some type of liquidity event or financial accident in the face of a higher cost of capital, which happens every time. Some sort of over-levered or lower quality player will get exposed, will have a contraction, or maybe it's simply the unemployment rate rising as margins compress due to that higher cost of capital and slower revenue growth. And by the way, that means it's a great environment to pick up the income that's available in high quality bonds. You just nailed it when you talked about the fact that bonds just haven't really sniffed this out yet. They haven't sniffed out lower growth and lower inflation, and bond yields are still up on the year. Remember, we started the year with the 10-year Treasury yield sitting at 3.88. We're right around 4.24 right now. So we've seen this backup in bond yields that to us is creating a really attractive entry point if you see inflation slowing, if you see growth slowing. Now, maybe it doesn't move in a straight line, but you can get paid to wait. High quality bonds are offering 5 to 6% income, and that is close to the highest levels they've been over the past 20 years. So bonds are mispriced to us in an environment where we do eventually see a contraction unfolding.
What do you see the 10-year doing in the next few months?
Yeah, I mean, we think it'll chop around before it eventually falls. If there
falls
is
how
some
much?
type of, oh, great question. So, on average, if you look at the past few Fed cutting cycles, the 10-year Treasury yield falls on average about 2.5% from peak to trough. So that is a big drop. Say we peaked, right around 5%. That brings us down to a 2 or 3 handle on the 10-year Treasury yield once we get through the economic contraction. So if you're a big fan of bond math, that is a really attractive return from a duration standpoint. And then you get to add the income back in. So I think you could potentially even see double-digit returns across areas like the 10-year Treasury yield in that contraction environment.
So are you saying really what investors need to be thinking right now is much more fixed income exposure at this point and not equity exposure?
We still like equity exposure, Carol, and it's a very unpopular story to be talking about fixed income because it certainly hasn't worked as well as just owning that one big stock and kind of letting it ride. I do still think there's opportunities in equities. The challenge is the starting point. So stocks are trading at elevated multiples. If you look at the U.S. tech sector, it's trading at a 31 times forward earnings right now, and that is the highest since we were coming down from the tech bubble in the late 1990s. Now, there's an old saying that valuations are not a catalyst. There probably needs to be some shift in the macro regime. We need to see earnings across technology companies falter, and frankly, they haven't. And the tech sector has got the best earnings across all S&P 500 sectors. So the fundamental case for owning tech stocks is there. It's just the valuations are looking awfully egregious to us. So we want to own them, but we want to diversify by looking at places like U.S. mid-cap stocks, which are trading at the steepest discount to their large cap counterparts since the late 1990s. They benefit from an overweight to high quality industrial. So there's other areas to be in equities, but we like bonds to do some more heavy lifting in portfolio.
Emily, just want to end with an equity in the last 30 seconds. Shares of NVIDIA down 6%, more than 12% over the last 3 days, $400 billion in market cap just gone poof. How are you watching it?
Yeah. I can't remember a time when one stock ever meant this much to the market. It's so remarkable. I mean, it's up 150% year to date, 200% over the 1 year period. So I think it certainly makes sense to expect some type of pullback in this name, but it's incredibly, it's amazing how important this one name has been to the broad market. Again, it's a high quality stock, great balance sheet, lots of cash, but the multiple is pretty extended here.
That mirrors our Kuntal Sobhani of Bloomberg Intelligence, who basically said it's a fundamentally driven story, whether you look at revenues, EPS, or market cap. It really, at least from his perspective, makes an awful lot of sense. Emily, hey, thank you so much. Emily Rowland, co-chief investment strategist at John Hancock Investment Management, joining us in Boston on this Monday, June 24th. We've just got about 10 minutes left in the trading session.
Yeah, coming up next, we're going to be joined by our Bloomberg TV team. It's our cross-platform
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pella. 3:53 on Wall Street, 7 minutes to go before the closing bell. We've got Alnylam shares up 35%. They're soaring after its drug succeeded in treating a progressive and deadly form of heart disease, potentially opening up a new avenue for the company's top-selling product. Alnylam, based in Cambridge, Massachusetts, again, right now up by just about 35%. Airbus has cut its annual aircraft delivery target to 770 units from a previous goal of 800 jets, citing persistent supply chain issues. The European playmaker now expects adjusted earnings before interest and tax of $5.5 billion this year, down from a previous goal of as much as $7 billion. ADRs of Airbus now down by 6.5%. Federal prosecutors are recommending criminal charges against Boeing for alleged violations of a deferred prosecution agreement over 2 deadly 737 MAX crashes. That's according to a report from Reuters, though it does not specify the charges. Bloomberg Intelligence senior aerospace analyst George Ferguson says this comes at a tough time for the plane maker.
Boeing right now isn't on the best financial footing, right? They've got about $17 billion in cash. They've been burning cash pretty heavily. We're looking for them to, they've actually indicated, and we're watching to see if they can really ramp up production in the back half of this year to start generating cash, because they can't really, survive at the levels they are right now. So I think the regulators have to be careful from that perspective, but from the oversight perspective, I think they can go all in on this.
George Ferguson of Bloomberg Intelligence. Boeing up now by 1.4%. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, under 5 minutes left to go in the Monday trade. We're going to head over to our TV colleagues in just a moment. We're going to count you down to the close on this Monday. Having said that, we've talked a lot. Charlie just talked about, we talked a lot about NVIDIA. Our Sujan Kabani of Bloomberg Intelligence really actually walking through and saying that fundamentally what we've seen in terms of the NVIDIA story makes a lot of sense. Whether you look at the revenues, I think he said something, it was like, was it 4 times in terms of what the trade is? I don't know. I'm looking at my notes.
You're looking at your notes. I can't read them because they're upside down. But you take great notes during these interviews.
His point was fundamentally it's a driven story.
Yeah.
So, and he goes, why it's so hard? He says he looks at the large customers to kind of get an idea, large customers of NVIDIA, to get an idea of exactly what's going at the company when they try to figure out the outlook. But it's tricky to make those guesstimates, if you will.
It's also been tricky for those folks who are maybe taking the wrong side of leveraged bets when it comes
tricky
to
or terrible.
NVIDIA. Hey, I'm not going to, assign some sort of judgment here.
Okay.
But day traders have been riding this AI-fueled stock mania. It's great when it goes up. You get double-digit returns week in and week out. Now, though, after pouring a record amount of cash into a leveraged up ETF, a cohort of retail investors facing big losses following the $400 billion wipeout in NVIDIA. This story by Isabel Lee and Denitsa Sakova.
We're talking specifically about the Granite shares 2 times long NVIDIA daily ETF, ticker's NVDL. It delivers double the daily return of NVIDIA. It saw a record $743 million inflow last week as investors sought to amplify gains in what has been dubbed the world's most important stock. The timing has proven to be not so good as the fund has tumbled about 22% since Tuesday's close. It's still up around 340% in 2024. We like to give you bigger, bolder perspective.
So if you bought this January 1st, then you're in good shape.
Probably doing just fine.
Yeah, but if you bought it last week, like, $743 million record inflow last week, then it's going to be a little painful.
Yeah, I mean, it's high octane when you look at this ETF. So, yeah, if you get the trade right, it definitely pays off well. But if you get it wrong, it basically uses derivatives to boost returns or reverse performance. So we've talked about them before for different things, but nonetheless, for this one from NVIDIA, down 3 days in a row, we've talked about it being an official correction, but we will see. 3 days. Against a bigger, broader time of trade.
It was launched in December of 2022, and it's lured about $1.8 billion in 2024.
All right. We're going to talk, I'm sure, NVIDIA is going to come up. Right now, we're heading over to our TV colleagues. That's because the closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele to take you through the closing bell. And it's our global simulcast. It begins right now. Scarlet Fu joining us in the TV studio. Carol Massar lost in space along with Tim Stenovic in the radio booth as we welcome our audiences across all of our Bloomberg platforms. Carol Massar here on this Monday afternoon.
Can we do like the debate on Thursday? Can we just shut off your mic? Can we do that?
Oh, Carol.
Oh.
She's coming in hot on this Monday afternoon.
What's wrong with her?
That was mean.
That was mean?
Yeah, he was saying Lost in Space because I think you said Danger Will Robinson earlier.
Oh, is that what you said?
From our
were you actually listening?
Romaine watches.
I used to listen to your show, but after today.
Romaine watches, he listens. Is that what you said, Danger Will Robinson?
I did. Wow, I'm really charmed that that was, okay, all right, take it back. All right, let's talk a little bit about markets. Some outperformance, a little focus here. Banking stocks actually outperforming the broader trade here, up about 1.7%. You guys saw that story about folks in the know saying the Fed has shown some regulators maybe some changes to the bank capital overhaul. So maybe it could be a little bit more positive to banks. But banks have really been up, I think, most of this session here.
Look, I can't go any further without talking about
I'm trying to come back here. That was
NVIDIA.
hard.
It's just down 6.66%, down more than 12% over the last 3 days. Interestingly enough, not dragging down the entire index, although the NASDAQ kind of getting pummeled. But the S&P 500 only down 0.2%.
That may be the case right now, but you wonder what's really going to be the catalyst this week. I mean, we know PCE on Friday, but until then, it feels a little bit like we're just kind of drifting.
As we get the closing bells here in New York, some weird price action here on the day as you're seeing some of the transports, industrials, and cyclical names get a bid while everything else, I don't know, kind of is on the back foot. The Dow Jones Industrial Average higher by about 260 points, roughly 0.7%, right around that 39,400 mark. The S&P 500 is going to close in the red, only down about 0.3%. Obviously, a big drag today coming from NVIDIA and a couple of the other big tech companies, including Amazon, Broadcom, and Microsoft. The NASDAQ also feeling the pain from those same names, lower by about 1% on the day. And the Russell 2000, a relatively decent bid here on the day, decent outperformance, up 0.4% here on the day.
All right, Romaine, so let's get to the S&P 500 a little bit more. Most names, surprisingly, actually gaining ground today. 353, 147 to the downside, 3 unchanged, even despite what I would call a meh trade here, Scarlett, on this Monday.
Yeah, I'm looking at the sector performances, and 9 out of 11 groups are in the green. Now, it doesn't look that way on this IMAP because tech, which is the biggest sector in the S&P 500, is down by more than 2% thanks to weakness in Supermicro, Computer, and NVIDIA. On the flip side, the biggest gainers, energy. You have all 22 energy names in the S&P 500 gaining as oil prices rebound. Utilities and consumer staples also doing at least better than 1%.
All right, Scarlett, let's get to some of the individual gainers. Kind of a mixed bag for me. ALNY, Alnylam Pharmaceuticals, really an outperformer in today's session, up about 34%. This is after one of its drugs succeeded in treating a progressive and deadly form of heart disease, potentially opening up a new avenue for the company's top-selling products. So this was certainly a big gainer in today's session. Cocoa prices easing, slumping the lowest in about a month. Some favorable weather in West Africa boosting the supply outlook amid thin trading. So you had names like Hershey up about 2.9% in today's session. You had Mondelez up about 2.9%. So some outperformance in those names. And here's another one we don't necessarily talk a lot about, RXO. This one was up about 23% in today's session. The trucking company agreed to buy UPS's asset-light freight brokerage business, Coyote Logistics, for more than $1 billion in a deal that adds scale, according to analysts. So that was an outperformer in today's session.
Okay, you got the gainers. I got the decliners. I do want to start with shares of NVIDIA. They fell 6.7%, closing with the biggest drop in 2 months, down for a third day in a row. Over that 3-day period, down close to 13%, so officially in correction. Lost about $430 billion in market cap over the last 3 days. It's no longer in the $3 trillion club when it comes to market cap. We should note it's up nearly 140% so far this year. So zooming out, the stock has still had just an incredible performance. The last 3 days have been tough for shareholders, if they got in, especially if they got in just last week. ResMed shares falling 11.5% today. On the percentage basis, the worst performer in the S&P 500. Makers of devices that treat sleep apnea, such as ResMed, tumbled today. It followed additional clinical data from Eli Lilly that showed its weight loss drug reduced the severity of sleep apnea. So we saw shares of companies that make devices to treat sleep apnea fall today on that news. Also watching shares of Coinbase down 6% as crypto-linked companies fell today. Bitcoin did extend losses over cooling demand for Bitcoin. Finally, I do want to talk about ADRs of Airbus, checking in on those, down more than 6% today. This after the company cut its earnings and aircraft delivery goals for the year. Supply chain issues, believe it or not, continuing to deprive the company of components. It's a setback for Airbus at a time when demand for its jets are at a record. So still having supply chain issues when it comes to getting those critical parts for aircraft.
All right, guys, looking at the bond market, I mean, there's really nothing to see here. It's back-end loaded, a little bit of buying coming down. The yield's a little lower into PCE, but I just want to point out, some are looking at 4.186 on the 10-year, that being a technical level, and it's not that we're that far from that level. So kind of watch that as we get into the heavy eco data on Friday.
Well, speaking of eco data, maybe a potential read on economic conditions. Pool Corp, we don't talk about it a lot here, but it is the dominant seller of pools, and it just revised its guidance for the quarter lower by a significant amount. The company saying that it now sees new pool units for the full year down 15 to 20%, and says that it's seeing remodeling activity overall in homes down about 15% on this year. That compares to a previous estimate of flat to down 10%. The net effect of that is that the EPS range, the guidance that it's giving for the full year, $11 to $11.44 a share. Its previous guidance was $13 roughly to $14 a share here. So again, less concern maybe about Pool Corp itself and maybe a read on discretionary spending, at least on some of those big ticket items. We should point out the shares are actually halted right now, which is why they're unchanged.
Yeah, just looking at the release, the most recent pool permit data suggests persistently weak demand for new pool construction. Peak selling season almost complete. We now believe that new pool construction activity could be down, as you said, 15 to 20% for the year. Remodel activity down as much as 15%. So you do wonder whether, I don't know, is it just that everybody's done it, or just people pulling back in general, at least for those who are thinking about,
Have you seen the cost of a pool?
It's not inexpensive.
Very well said. What's interesting here is in this release, they say that more than 60% of our business comes from recurring revenue and is generally not impacted by macroeconomic conditions. So these are customers who normally would spend a lot and not spending as much.
Yeah, well, it's all like the accessories and stuff. I remember my uncle got a pool, and like all he did was complain about the cost to maintain it.
It's
best
the
thing to have.
It's all the things, yeah.
The best thing to have is a friend with a pool.
I have that. I have
not
that.
an actual
It's
pool.
awesome.
Everybody knows that.
And you know what else, Carol? It's good to have a friend with a boat.
Yes.
Which I've never been invited.
No idea what you're talking about.
Yeah,
All
one
right,
day that yacht of yours, to have a Bloomberg markets to close.
So let's talk about something that is not going on anymore. It turns out, do you get your shoe shined?
Well, okay. Go ahead.
No.
No, do you do any of
I
you
do.
guys?
Yeah, you know I do. So go
Okay,
ahead.
I know you do. You're pretty dapper. So what's interesting, though, is it's really kind of been a staple of New York for decades, years, right? I mean, people, just not even just Wall Streeters, but everybody, right? You go to a stand, you sit, you get your shoes. I've done it. It's kind of fun. It's kind of neat. But it turns out, as the world has gotten much more casual and they're wearing things like sneakers, unfortunately, these guys, they don't have a lot of business
It's Tim's
anymore.
fault. Tim, because you know that guy wears sneakers in the office.
I wear
People
sneakers
like
nonstop.
Tim.
Hey, it's not just me. Jamie Dimon is now wearing sneakers. So
Who wears a pair of black Common Projects? I've never heard of Common
I
Projects.
haven't either, but I gotta look them up after this.
It's like Golden Goose, $400. They're not distressed.
Speaking of distress,
expensive.
the whole thing with the shoe shiners is that they're now trying to clean sneakers, so you can go to them and then they'll make your sneakers look good, which is tough if you're wearing Golden Goose.
I was just going to say, yeah.
Yeah. Well, I'll just give you an anecdote. I do get my shoes shined around the corner from here, and the woman who used to do it, she's no longer there. She's not working. I don't think she got as much business once they reopened after the pandemic. So,
yeah.
So unfortunately, she moved on. So sorry to end on that sad note there.
Yeah, that's not good. But the idea that you got to sort of pivot and that Wall Street is definitely changing is a big part of that. Okay, let's go to something else that's kind of fun. And that apparently is that the so-called Ozempic revolution has wiped off, billions of food and drink companies. That's what they're calling it. It's an Ozempic revolution with a capital O and a capital R. So apparently that they're boosting sales of yogurt.
Yogurt.
Yogurt. This
do
is
I
a
do
new
with
thing.
yogurt?
That maybe with yogurt, that's
Does that
a
help
way.
you lose weight?
I think that maybe you go from chips to yogurt.
It's
is
high
the idea?
protein and it's not too filling because, you know, Ozempic obviously makes you not want to eat as much. It reduces your craving, but you get the protein. So that way you get the protein, but in a smaller package. And so all the yogurt companies are like, we're totally seeing a lot of demand. We're delivering a lot more varieties.
Remember a few months ago when everybody was concerned about the, you know, the packaged food companies just struggling as a result of Ozempic? Well, we all knew that they would actually just change what they were selling and get people to buy what they were, you know, buying before or what they're buying when they're taking Ozempic.
It's not just yogurt, too. You know, I was, there's going to be a debut in a couple weeks. I had down at General Mills, I got to interview their CFO for a special project, and they were talking a lot about, they took me through their test kitchen, all these new products they're trying to come up with to kind of address, I guess, what Alex was talking about there, which is, I guess, when you're on Ozempic, you need a certain different type of protein or different level
and also it
or something.
doesn't fill you as much.
So but they're all these food companies are working on trying to head that off at the pass.
All right, so that means, Tim, no more sandwiches.
No more sandwiches? But cereal and yogurt, that's fun.
PBJs. Tim's a big PBJ guy.
Eat dairy.
In the 4 o'clock hour, they come out.
Does he take the crust off, too?
No.
No, but it's a big sandwich. All right,
Whole
guys,
thing.
that is a wrap. Our cross-platform radio, TV,
Rocket fuel,
YouTube,
Tim.
Bloomberg Originals. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Business Week, and in case you are just getting caught up on how the markets did today, the NASDAQ Composite down a full percentage point, the S&P 500 down 0.3%, while the Dow Jones Industrial Average up 0.7%. NVIDIA certainly weighing on the S&P 500 and the NASDAQ, and I'm seeing her nod in agreement, which is always a good sign that at least I'm sort of on the right track. I'm talking about Abigail Doolittle. She's Bloomberg News Chief Markets Correspondent. She's here right now in the Bloomberg Interactive Brokers studio. We got to start with NVIDIA. 3 days in a row, no longer in the $3 trillion club, $400 billion in market cap, just wiped out over the last 3 days. 13% close to decline over the last 3 days.
Easy come, easy goes, I guess. I mean, you know, in terms of the fact that, you know, a year ago, January of last year, this stock had a market cap of less than $500 billion, and then all of a sudden, the world's most valuable company that really speaks to the degree of the AI mania, the frenzy, the parabolic uptrend. That's not to say it's not deserved, because the growth of this company is tremendous. The fundamentals are tremendous. Some people think that the valuation is not great. I actually, when I looked at it, I was surprised that it wasn't worse. Now, if you look at it on a price to sales basis, it's super expensive. So you can certainly find that story. Now, what's interesting to me about NVIDIA being down is it is starting to reverse that parabolic uptrend. I do suspect we're going to continue to see some consolidation, although I thought that earlier this year in April, and it did drop more than 20% at that time. These gains and losses are just so big because of the degree of the movement. The question is it going to be a true reversal? And at this point, I want to bring in Bitcoin, because we have Bitcoin well below that $70,000 level where the resistance is right now, below the all-important $60,000 level. It's not just psychological, it's also support. If it stays below $60,000 per Bitcoin, the level to watch is right around 56,500. It's actually a little bit above that. But if it breaks below that, we likely see Bitcoin go very quickly down to $40,000. Now, the reason I bring
But we went back to 57,000, what was it, in early May?
So if we were to describe this to our listeners, the peak up from earlier this year into the peak before May, that would be considered the one side of a top, then down to sort of it's called a neckline, and then back up. And because the second peak was less high than the first, it tells you the buyers were a little bit less enthusiastic. Now back down, but we need to see that neckline break.
But does Bitcoin trade like any other asset, or is it something different?
I honestly don't know how Bitcoin trades. I don't
24/7.
Yes.
365 is where we can start, right?
Because the reason I think about that, though, is like we've seen the run up in the NASDAQ, right? And some used to kind of think it was kind of akin to what the tech trade was. And yet it's a very different chart.
So it's a very different chart, but I have a great chart here. If you a couple of years ago, if you remember when NVIDIA was making its first run before AI was all about Bitcoin, because its chips were going to be used in the miners. And so these two companies traded basically together. It was the Bitcoin NVIDIA trade. if you put these two stocks or Bitcoin next to NVIDIA in a chart, directionally, they're highly correlated. They didn't break apart until really this year. Out of the pandemic bottom, Bitcoin right now up about 1,000%. NVIDIA up 2,100%. It just seems like that divide based on the past trading history where the gaps, and out of the pandemic, there was a big period of time where Bitcoin was trading richer at a greater percentage gain than NVIDIA. So what I would say is both signal risk on. So Bitcoin, with the quote unquote broken VIX, the people that we interview on Options Insight, they disagree with that. But if you were to use that, a lot of people use Bitcoin as a signal of risk on, risk off. I would say the same is true with NVIDIA.
Well, I was just going to say, and I'm trying to pull up a correlation here, but I can't do it while we're on air. You can do all this stuff.
I'm curious.
But about what...
you mean in the chart?
Yeah, the chart.
Okay.
The Bitcoin price versus the S&P 500. And you alluded to this just in terms of performance. The idea of it being some sort of canary in a coal mine or precursor to risk on or risk off sentiment.
So it's really interesting that you're saying this. So the S&P 500, I think, is up about 10% this year. I should know that straight up, but I don't. But it's up
14%.
14%. Bitcoin is now up 40%, but it's also down from its peak by like about 20%.
Yeah.
So it's really a crazy chart. So I'm actually making the chart you're asking for
She
right
does this
now.
well.
I'm going to
She
see.
does it well. She's speaking.
I would love to have
She
a
can
live
walk and chew
charting
gum at the
show.
same
I mean, I guess we
time.
kind of are doing that right now. I
Yeah.
mean, it's just so fun to see because it's going to be curious to see. Now, Bitcoin is just going to... So this is interesting. It's a real divergence. The S&P 500 is continuing to go sky high as Bitcoin drops down. So yeah, I would say that Bitcoin dropping below 60,000, if it stays there, and if it goes below the neckline of that pattern, 56,500, it's probably a strong signal that we are going to see the S&P 500 fall back in just as a risk tell. It's a tell. So what I would say about Bitcoin is a smart person I know, explained Bitcoin, or his theory on Bitcoin is if you think of the pool of liquidity of all the assets in the world as a swimming pool, but the Fed is often pumping money in. If they don't want to lose that money that they pump in, basically, you know how in a pool you have the areas that go out. I forget what it's speaking of pools, that the little
like a
area,
filter?
Yeah, the filter. So the air that so when it's really risk on, the water, the Bitcoin, the excess liquidity goes into the filter, and then when it's risk off, it comes back into the pool, as opposed to leaving altogether like real estate. And I do think that is
so much like a
certainly
measure of like liquidity.
It's a measure of liquidity. There's so much liquidity in this system right now that you have NVIDIA up 140% this year, despite the breaking of the parabolic uptrend. You have Bitcoin up 40% this year. And in the face of, now I was speaking of pools, I was really interested by that conversation that you all were having about Pool Corp, because what I thought of, and I've started to do these pitches every morning, I'm going to make this one for tomorrow. Winnebago is down more than 25% from its recent peak. So that's
another discretionary.
Yeah, people are not spending on, they're not spending on these discretionary experience that are sort of out of reach of the average person. It's not like you're spending $10 to go to the community pool. You're plunking down 50 grand or whatever it is to buy a pool, or probably a couple $100,000 to buy a Winnebago. I have no idea. I've never researched it that closely.
You don't park a Winnebago in New York City?
No, right over here on 58th Street. I have this special ticket that allows me to park and in fact, that's where I sleep. That's no.
Well, when Winnebago reported on June 20th, their third quarter net revenue was a disappointment.
Okay,
their
interesting.
adjusted EBITDA for the third quarter was a disappointment, and their third quarter adjusted EPS missed by 17 cents a share.
Great color.
And you saw price targets on the name fall post earnings. It's analysts cutting their price targets for the company. So some disappointment, and I don't know the color in terms of what they had to say. I just got to pull that up, but just what was actually in the release.
As you do that, Carol, what's really interesting to me is if we think about all the money that's been pumped into the system, it's going into the financial assets, it's going into stocks, it's going into Bitcoin, and it also is to some degree going into real estate, but not really because the market's so tight. It's not. But it's not as much going into Main Street, or at least that's what I would suggest this tells us. So there's a ton of liquidity, but it's not going to people as much.
I guess the company's CEO had said, while outdoor industry market conditions remain challenged, given inconsistent retail patterns and sustained dealer discipline relative to field inventory levels, we are generally pleased with the resiliency of our portfolio as our teams balance the pursuit of long-term share profitability and customer satisfaction across our premium base. You know, I don't know what that tells you, but industry market conditions remain challenged.
That's really interesting, Carol, because when you put that together with NVIDIA and Bitcoin, you have all this money going, and now it's coming out because people are uncertain. It reminded me a little bit of pre-GFC, where you would kind of get these mixed signals. But you want to speak. So
yeah, I just say nobody brings it together. Winnebago, Pool Corp, Bitcoin,
It was
and
pretty
NVIDIA,
impressive.
Like Abigail Doolittle. She is Chief Markets Correspondent, joining us
and
here
doing the
in our
technicals
Bloomberg
as we are live.
Jersey studio. Coming up next, Citizen Bank has its eye on private banking. We're joined by the Vice Chairman after this.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. NVIDIA shares now in correction territory as it extended a sharp recent sell-off. The stock had its third straight negative session today. It has dropped 13% over a three-day slide, putting it past the 10% threshold that represents a correction. NVIDIA today down 6.7%. Stocks lost traction with NVIDIA slumping. S&P down 16, drop of 0.3%. The Dow up 260, up 0.7. NASDAQ fell today 192 points, down 1.1%. 10-year 4.22% with a 2-year at 4.71%. Gold up $11 the ounce to $23.33, up 0.5%. And West Texas Intermediate crude up 1.1%, 81.67 for a barrel of WTI. Alnylam Pharmaceuticals soared today after its drug succeeded in treating a progressive and deadly form of heart disease, potentially opening up a new avenue for the company's top-selling product. Alnylam today rallied 34.5%. Recapping stocks lower, S&P down 16, down 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update. Carol, I don't know if you saw this story in the Journal at the end of last month. It was about the Memorial Day weekend migration, the roughly 800,000 First Republic Bank customer accounts. They were migrating those over to JP Morgan. First Republic, of course, failed last year. JP Morgan acquired it. So some former First Republic customers weren't so happy with the migration, and what the Journal story focused on was former customers complaining about not being able to make payments with debit cards, long waits for customer support, even a small business owner not being able to access money he had in a First Republic small business account. We should note that a spokesperson for JP Morgan told the Journal that it was, quote, the smoothest migration ever, and that after Memorial Day, most customers didn't have any problems accessing their bank accounts.
All right, so everybody, the reason we lay this out is that this is the opportunity that Brendan Coughlin sees. He's Vice Chairman and Head of Consumer Banking at Citizens Financial Group. He joins us here in our Bloomberg Interactive Broker studio. Brendan, great to have you here with us. How are you?
I'm doing great. Thanks for having me.
We want to get into that and the potential that you guys see, certainly when it comes to banking areas and where you guys feel like you can build it out. But I want to first start with bigger, broader, the environment. How would you describe it right now?
There's still a lot of uncertainty, with rates certainly higher for longer. Inflation is stubborn and persistent, even though there's been some positive signs. Consumer confidence has been somewhat volatile, but now feels range bound, but it's still lower than it was a year or two ago. And so, I think we're still in a relatively uncertain economy. Everybody's hoping for a soft landing. Unemployment has been low, which has been good, but all those are factors that weigh on the consumer psyche. Spending has been high, and I would say broadly, since COVID, the consumer has normalized. Their excess cash and deposits on hand has largely been spent. Credit.
You guys see that in deposits?
We have seen that in deposits. It's sort of on an inflation-adjusted basis. It's generally back to normal for the average consumer in the U.S. And delinquency and credit charges have normalized. They've come back up, but they're stable. So we feel good about the economy right now and the health of the consumer in general. But there's certainly some things that we're watching.
I don't know if you heard our discussion earlier about the breaking news when it came to Pool Corp, the maker of swimming pools. They cut their earnings per share guidance for the full year. The guidance missed the average analyst estimates. They cut their guidance significantly to $11.04 to $11.44 per share, essentially saying that the discretionary components of our business have been challenged by cautious consumer spending on big ticket items like swimming pools and outdoor living projects, resulting in sales of building materials declining 11% of a year compared to the same period in 2023. Obviously a higher end consumer who's building a pool. Do you see any weakness in the higher end consumer pulling back on discretionary spending like this?
We don't at scale in terms of the health of the higher end consumer. If there's any stress in the economy, it's the bottom two deciles, folks that generally are paycheck to paycheck, where we're seeing a little bit of risk and volatility. Now, what I would say on that point on the higher end discretionary spending is we're in an environment that we've never been in before, with all of the unnatural events of COVID, and then honestly all the unnatural events post-COVID of folks being locked in their house and then going out and spending like crazy in 2022 and 2023. So naturally there may be a lull here where folks consolidated a lot of spending in 22 and 2023 and they got it behind them. So I don't know that that's necessarily a sign of stress on the higher end consumer as much as it's just unnatural volatility and economic activity given the COVID ramifications.
What are the advantages that you guys think you guys can offer versus maybe some of the big Wall Street banks? And I bring it up because we had a story earlier today about the Fed basically floating maybe a weaker version of the bank capital overhaul, which would mean maybe some of the ratios and so on and so forth wouldn't be so onerous on some of the big Wall Street banks. But talk to us about your position and kind of your lane specifically for Citizens Financial and where you see see the growth opportunities are, and maybe because of some of the restraints that are, or some of the rules and regulations on some of the bigger banks.
Yeah,
And you guys also have regulations, of course, too.
The regulators are definitely trying to correct for what they believe to be systemic challenges in the market through the spring bank failures, and regional banks are certainly not immune to it. Maybe the opposite, given the perception of regional banking stress, which, as everybody at this point knows, it was much more idiosyncratic. It wasn't really regional banks, but nevertheless, we are very well structured. We've got one of the highest capital ratios in all of banking industry. We've got our liquidity ratios are comparable, if not better, than some of the big money center banks. So we feel very poised to capitalize on this market. In fact, you see us out playing offense. You mentioned in the tee up here some of the work that we're doing in the private banking and wealth space. My point of view is that the leaderboard changes at scale in moments of market crisis. So job number one for us last year was making sure the bank was safe, sound. We had capital, we had liquidity. We were a beneficiary of the deposit inflows like many of the other big banks. And so once we got past that, we said, look, we've gone through 10 years post our IPO, transformed the bank. Now let's make a couple of very distinctive and smart bets for the franchise. So when this market blows by, we will have repositioned this bank to win long term.
So let's talk about private banking, because I know that's an area that you are looking at very closely, and I've actually seen ads for it lately trying to pull consumers towards Citizens Financial Group. What's the white space that you see right now in the wake of the collapse of Silicon Valley Bank and First Republic?
There's an incredible white space, and many banks and many other consumer goods companies talk about their obsession around customer service. Unfortunately, it doesn't always play out that way. They don't actually deliver what they said they're going to deliver. And I think one of the real distinctive factors of First Republic and Silicon Valley was the intensity around their service proposition. It was very real. The media perceived it as growth through low interest rate mortgages and such, and there was some truth to some of that too. But when you talk to clients, the first thing they talk about is the unbelievable white glove service that was there. So my view is that is a huge amount of white space, that you've got the smaller regionals that don't have the sophisticated products and services to meet the needs of high net worth, ultra high net worth clients. And then you have the big money center nationals that have all the sophistication, but they're so big and they're so siloed and so bureaucratic that they can't bring it all together and value the client as one client. And so that's the space we're aiming to capitalize and create that single point of contact private banker that really delivers distinctive services. Think about the clients. Typically, you're a business owner. That's how you've created your wealth. You need personal private banking. You need banking for your business, and then you want wealth management. The bigger banks have those in 3 different silos, and the senior executives don't talk as much. We can bring that all together for the client, and that's what we're aiming to do. And I think there's incredible white space there for those that do that well.
How much of this is potentially a growth area for you guys, and what kind of growth are you anticipating?
This is an incredible area of growth for us. So we've hired 250 folks so far to build our private bank. And if you rewind back, through our IPO, we've transformed the consumer bank. We've built out a best-in-class commercial bank. We're now talking about the bank as 3 legs of the stool. Now insert private banking and wealth management. In our march, we're in sort of the top 10 U.S. commercial and retail banks. If we can get this right, we think it can really help propel the brand and the company into the top 5 over time. We have committed some external numbers that by the end of 2025, we will have $10 billion in deposits, $10 billion in AUM, and $9 billion in loans, which will be 5% EPS accretive, and that's just for 2025. So we think this is going to be incredible growth stimulant for the franchise.
Well, on that, when an individual does come to you and choose to be part of the private bank, where are you, for lack of a better term, making money off of that individual?
Yeah, well, the return profile of what we're putting together is actually accretive to Citizens overall. So we've been public that our medium-term return objectives are 16 to 18% ROTCE. This is one of the things that will help us get there. The deposit quality that we're getting from these clients is incredibly strong, which may be counterintuitive to folks on how these banks failed, but we're really growing at the speed of quality. So the deposit book is high quality. It's really given us the right to win in wealth management for the first time in high net worth and ultra high net worth. We bought a RIA called Klarfeld in 2018. We're building on that chassis. We're talking to some of the very biggest and best wealth managers in the United States. We'd hired a $5 billion team in the Bay Area, a $1 billion team in Boston. It's propelling growth in wealth management, which is sticky annuity-based fee income.
Brendan, who loses though in this? You guys also cater to the small business community, and I'm just wondering, like, what what loses as a result of maybe this focus?
Well, this is all incremental to our current strategy, and so we're not taking focus down. Our small business banking franchise is thriving, and in fact, given that the connection to the high net worth, ultra high net worth space tends to run through small business owners as creators of wealth, this is actually accretive to our focus in the community for small businesses as well. So, look, who loses in this? I think it's the banks that don't have their act together in terms of the integrated service model that will ultimately lose on this.
Only have 20 seconds, but I got to ask about this Fortune article that talks about you being a potential part of the horse race to replace current CEO Bruce Van Saun. Any comment there?
Bruce has a lot of gas in the tank, and anybody that's living and breathing in this company will know that he's the reason why we are where we are, and we've transformed the organization. So this is good governance for the board to lock up their talent long term. We're not expecting Bruce to go anywhere anytime soon.
All right. Appreciate you joining us.
Thank you very much.
Brendan Coughlin, Vice Chairman, Head of Consumer Banking over at Citizens Financial Group here in the Bloomberg Interactive Brokers studio.
All right, coming up next, folks, we get to one of the most read stories on the Bloomberg terminal. But ahead of that, let's check in on world and national news with Amy Morris in D.C. Hey, Amy.
Hey, Carol. The U.S. is expected to announce it is sending an additional $150 million in critically needed munitions to Ukraine. Sources tell the Associated Press that announcement should happen tomorrow. The latest military aid package comes as Russia accuses Ukraine of using U.S.-provided munitions to strike inside Russia or Russian-held territory. The Supreme Court signaled it will take the unusual step of extending its term into July as it finishes work on about a dozen cases, including Donald Trump's bid for immunity. The court had already scheduled Wednesday as an opinion day this week and has now updated that to show it will issue rulings on Thursday and Friday as well. The U.S. Supreme Court is also set to take up the controversial issue of gender-affirming care, agreeing to review a lower court decision that upheld bans in Tennessee and Kentucky. Emory University law professor Fred Smith says the issues include gender discrimination and whether a state can override a doctor's best judgment for a patient.
So you have kind of an equal protection question here because it implicates gender discrimination. And then you have a privacy issue here to the extent that it's interfering with really deeply personal medical decisions.
Emory University law professor Fred Smith. The court will hear the case in the 9-month term that starts in October, focusing on the Tennessee law. The Biden administration is announcing new steps to increase access to affordable housing as high prices on groceries and other necessities and high interest rates have dramatically pushed up the cost of living in the post-pandemic years. Treasury Secretary Janet Yellen is promoting the new investments while on a trip to Minneapolis. The investments include providing $100 million through a new fund over the next 3 years to support affordable housing. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks sold off today, losing traction. NVIDIA now in correction territory. S&P down 16, a drop of 0.3%. Dow Industrials up 260, up 0.7. NASDAQ down 192, a drop of 1.1%. 10-year yield 4.23%. The 2-year 4.71%. Gold up $11 the ounce, 23.33, up by 0.5%. West Texas Intermediate crude up 1.2%, 81.68 for a barrel of WTI. Stocks lost traction as a roughly $430 billion plunge in NVIDIA raised speculation that the rally in the industry that has powered the bull market is due for a breather. Again, NVIDIA today down by 6.7%. Well, certainly today it was all about NVIDIA. Emily Rowland is co-chief investment strategist at John Hancock Investment Management, and she was a guest right here on Bloomberg Business Week.
I can't remember a time when one stock ever meant this much to the market. It's so remarkable. I mean, it's up 150% year to date, 200% over the 1 year period. So I think it certainly makes sense to expect some type of pullback in this name, but it's amazing how important this one name has been to the broad market.
Emily Rowland of John Hancock Investment Management. Again, NVIDIA today lower by 6.7%. Recapping, a mixed day, S&P down 16, down 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here on Bloomberg Business Week. We do want to get to, I believe it is still the most read story on the Bloomberg on this Monday, atop that list. It's about a well-known name in the hedge fund space, and he is now out on his own.
Yeah, we're talking about Bobby Jane, and here with an update on what he's up to is Bloomberg News hedge fund reporter Hema Parmar. She's here in our Bloomberg Interactive Broker studios. Remind everyone, who is Bobby Jane?
Right, so Bobby Jane was a former co-CIO over at Millennium Management. He spent about 7 years there. During that time, the firm's AUM doubled to more than $60 billion. He shared the co-CIO role with Izzy Englander, which is pretty notable. It shows you how senior he was at the firm.
Right.
And he also spent 2 decades in very senior roles over at Credit Suisse. So as he's launching this hedge fund, it really is one of the most closely watched new launches that we've seen in a long time because of his tenure and because of his going out there to build a multi-strategy hedge fund, which Millennium is, Citadel is, Balyasny is. This
Remind everybody what that means.
So multi-strategy hedge fund is a fund that invests across different asset classes. So they will do stocks and bonds and arbitrage bets, credit, macro, quant. So it's typically, these firms have a big build out. They have teams that in some cases don't talk to each other. They have pods of traders. And some of these funds have grown in size and just so much in the past few years. You've seen an influx of assets into these strategies.
What do we know about the size of the fund, where the money's coming from? Give us some color on that.
Yeah, so he raised $5.3 billion.
That's pretty big, right?
This is very big. It's a good amount, and quite honestly, in a very tricky environment.
Yeah.
He was initially seeking as much as $10 billion for the fund. He then did reduce that target down to between 5 and 6, so reached that goal, and did cut fees earlier on in the year. But still, $5.3 billion, sizable, biggest launch we've seen since Exodus Point, which started with $8 billion in 2018, and one of the biggest we've seen so
in
far this year.
how many years? So 6 years.
Yeah.
The biggest. Wow.
Yes,
okay.
yes.
Okay, you talked about multi-strat funds, but what specifically do we know about the deployment of cash or deployment of assets and asset allocation in this one? When the money is all there?
Yes, so you're seeing a split. So about as much as 30% will be in fundamental equity. You can expect that probably to be the strategy that will be built out first and have the greatest potential exposure. Though all of these will be trading on July 1st when the firm starts. They're going to do a lot of equity arbitrage and just generally arbitrage bets. So think SRTs, index rebalancing, fixed income relative value, some of these trades where you bet on the difference between certain things or you take the risk off the bank. So those are pretty opportunistic. Commodities. He's also plans to build out a physical commodities business and also a quantitative business. So these are,
some hands in a lot of things.
It's a lot, yes. And so he's got 200 people working on it that he's hired so far, 40 portfolio managers. So the firm has been very busy ramping up a lot of these. And, setting up a quant business is not easy.
fees associated with a business such as these to
Yes.
support the 200 plus people who've been hired?
Yes, so pass-throughs. I feel like we've talked a lot about pass-throughs and multi-strategy funds. So pass-throughs are when these giant firms pass along to investors expenses. It could be compensation, potentially like real estate or leases, marketing, all kinds of expenses. That
Hold on, explain
investors,
how this works. So you invest money with a firm,
Yes.
and they come back and say, okay, well, in addition to the performance fees,
Correct.
you're also going to help offset the cost of our office?
Offset the cost. Definitely, the most expensive really is the talent.
Okay.
So we have, you've seen the pay packages for some of these guys, the portfolio managers really skyrocket lately, and there isn't enough talent, and there's this big talent war. So people are paying more to get the right traders, the best traders, or people they think are the best traders, and so those costs have risen, and it's being passed through. So the question is then, what is the net return of the fund that on the investments that the investor is getting? And this year you're seeing about 10 to 12 to 15% return. There was a year a couple years back when Citadel was up 34%. So that's net of fees. That's after you cut out all of these expensive fees.
Which is pretty remarkable.
Which is pretty remarkable.
This
but it's not
firm,
always the case.
this firm, you write, I think in your story, that it raised money via a so-called drawdown fund, meaning it will tap the cash as needed over a year. Is there something significance to that?
Yes. So
Or some significance?
yeah. So when Exodus Point, for example, when Exodus Point launched its fund, they did not do it in a drawdown fund. So they collected all the money and then invested it when they saw the opportunity, but they had collected the investor
They had the
capital.
money on hand.
They had the money from the investors. But because they didn't necessarily put it to work fast enough, some investors were not very happy that the money was basically being sat on, charging fees, but not invested.
Right.
So when you look at what Jane Global is doing, they're taking the money, but it's in a drawdown structure, which means you commit the capital, but they actually tap that capital over time when they see the opportunity. So you shouldn't be charging fees, and you shouldn't be sitting on that money for too long.
Does that also mean that investors are like a little bit more patient, saying, okay, you didn't take the money till now or whenever, and that's when I start to think about kind of my returns on my investments?
Potentially, but I think they're going to be watching very closely because, every month I think they'll be watching closely to see how the fund does. It's always a risk when you invest in a new manager, right?
Yeah.
And
even though he's got somewhat of a track record?
He's got a very good track record. People think highly of him.
Yeah.
Past performance is no indication of future results, Carol. I don't know
But in a hedge fund industry, right, that's what you're buying is the manager.
You're buying the manager. I think some people are investing because they believe in Bobby.
Yeah.
Some people are investing because they think, there isn't capacity in some of the bigger funds that are close to new cash. There's a few reasons.
You write that the fund has also lined up bank wealth platforms, including Morgan Stanley and Goldman Sachs, HSBC. How do then customers of those banks get exposure to the hedge fund?
Yes, so we have seen this real push kind of across investing into more retail high net worth individuals. So these managers, these high net worth individuals who didn't get access typically to hedge funds many years ago, now will have an opportunity to invest should they see fit. So these wealth platforms may have the capacity to invest a certain amount of money, gather it from their wealth clients, and those wealth clients may get exposure. We saw this with Tiger Global and Co2 and some of these long-short equity guys raising more from the retail investor. Some of them, in Tiger's case, got in right before the fund did not perform well, but that's not always the case. And I think when you look at the swell of capital that's come into multi-strategy funds, you could see some wealth people saying, you know what, we want exposure to those too.
You report Jane Global is going to start trading July 1st. What are you going to be watching out for?
Yeah, we're going to be seeing how they build out the business. We're going to be keeping a close eye on how they do the first few months of performance. I'm curious about, what the fees look like. And yeah, I think there's a lot of interest and appetite in this fund. People are very curious, and he's got, such tenure in the space.
Right.
That I think there's, a lot of fascination about a brand new fund of this size.
Very, very cool.
When he puts the money to work, can he will that be kind of interesting to see whether it's more into the equity, or will we assume it'll be equal? Just real quickly.
Some amount of capital should be in all of the strategies at once, but it might take longer for the quant unit, for example, to get up and going than, let's say, the fundamental human run equity.
There's just so many pieces to that pie, which makes it fascinating. Hema, thank you so much. Hema Parmar, she's hedge fund reporter at Bloomberg News. Check out her story. It is, I think, the second most read story on the Bloomberg all day today. This is Bloomberg Business Week.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pelletin. Nvidia shares down today by 6.7%, with the AI-focused chipmaker entering correction territory as it extended a sharp recent sell-off. The stock had its third straight negative session. It has dropped 13% over that three-day slide, putting it past the 10% threshold that represents a correction. Big banks looking ahead to Wednesday. That's when we get the results of the Federal Reserve stress test. Tom Michaud, the CEO of Keefe, Bruyette & Woods, says the results are likely to show that American banks are in very, very good shape. And on Bloomberg Television this morning, he told us the banking industry is well capitalized, given the challenges it has had. He also says he is particularly bullish on the nation's bigger banks, including Bank of America.
We have earnings models by quarter for net interest income. I think just about all of the 220 banks we follow, nearly all, are going to hit a bottom on a quarterly basis, either last quarter or this quarter. That's the reason why we upgraded Bank of America, is the second quarter is the inflection point, and it gets better from here. So it's all a question of timing.
Tom Michaud of Keefe, Bruyette & Woods. Bank of America today up 1.3%. Citigroup up 2.2%. Goldman Sachs up 2.7%. JP Morgan Chase up 1.3%. Airbus has cut its annual aircraft delivery target to 770 units from a previous goal of 800 jets, citing persistent supply chain issues. ADRs of Airbus today down 6.1%. Rival planemaker Boeing up today by 1.4%. And those are our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, we are getting ready to wrap up the Monday edition of Bloomberg Business Week. Carol Messer along with Tim Stenivek, though, strolling into the studio is none other than Doug Krisner, getting ready for Daybreak Asia.
How are you?
I'm doing okay.
Second day here. Yeah.
Yeah, it's Asia Tuesday.
It's Asia Tuesday.
Yeah, right. And we're going to have a special program on Thursday because of the debate.
Okay.
So there's we're not going to be
I'm
on.
kind of excited about the debate.
Why?
I just think it's important. I think you have two leaders. Look, we've done all the polling, right? And so many people, so many Americans, or a fair amount of Americans, voters, don't like either candidate. So I am curious about
double haters, I think they call them.
They are
right?
called double haters. So I think it's going to be an interesting election no matter what. But I think this debate's a big one. And
I wonder if stuff like this moves
parameters around
moves
it.
the needle. Yeah, the parameters are really interesting.
Yeah.
Cut off the mics, no audience.
Yeah.
Right.
90 minutes, 2 breaks.
Standing up.
Yeah.
Right.
Yeah.
One of the other things.
Don't they always stand up?
They may have tried to negotiate an option where you would be kind of at a desk, right?
Yeah.
But that didn't fly.
Yeah.
But one of the things that we talked about in our weekend show.
I'm just picturing like,
flying.
Do you get the same size desk?
Right.
Like, just trying to picture it.
I'm
It's like an SNL skit. I'm sorry.
So
I thought SNL too at the same time. Okay, serious. Doug's here.
No, it doesn't have to be serious. We can have fun.
Okay.
But one of the things we talked about in our weekend show was the issue of China and whether or not this is going to become a big focal point. I mean, Trump has proposed some pretty severe tariffs.
Yeah.
We've talked a little bit about that. And Janet Yellen apparently is speaking today, or was in Minneapolis.
That, right?
And
Yeah.
one of the things she's talking about is tighter restrictions on investment of U.S. companies into China, that those guidelines will be revealed before the end of the year. Here's the thing. The Biden administration may not be relevant by the end of the year. So there's a lot, I think, that's from the China side, very uncertain. And I think that the way in which Beijing regards a potential Trump administration is entirely unpredictable. This is, kind of, because they've dealt with him in the past.
Yeah, no, I understand. The thing is, I mean, I feel like we've talked about, doesn't matter what side of the political aisle, right? That everybody seems to be pushing back on China, right? We're seeing this. We're seeing it globally, right? We're seeing Europe with their own restrictions, whether it's on EVs or other things. So it's really just a shift in the sentiment, I feel like, globally. Unless you're Russia or unless you're, right? We've
One
talked
of the
about
things
those
that I think
alliances.
China is dealing with right now, and this is the criticism not just from the U.S., but from the European side as well, is that when you're dealing with a situation where you have so much overcapacity and sluggish domestic demand,
Right.
what are you going to do?
Who are you
How
gonna
are you
sell
going
it
to
to?
keep your manufacturing technologies, kind of at work? Whether
Yeah.
it's it's automobile production in the case of EVs, or solar panels, or anything else, you're going to lower prices and export into countries that are willing to take them. And for the Europeans, they're pushing back on a lot of this stuff, as is the U.S.
Tim's still thinking about the desks.
I think
and
I saw
the,
Canada
debate.
also. Canada
Yeah,
also.
yeah, the Canadians, absolutely.
Yeah.
And the Canadian ambassador yesterday was pretty critical of Xinjiang and the treatment of the Uyghur minority population there, and that's in the issue of forced labor and the manufacturing capabilities in Western China that may be using forced labor.
And yet, global multinationals, right? Don't we continue to report that they all say everybody thinks everybody's going to come running out of China, but they're not. They're still relationships.
30 years is a long time to perfect the automated, mechanized manufacturing process. I was talking to Brian last week about, I asked him, have you ever been to the mainland and looked at one of these facilities? And he was talking to me about touring a Honda facility, and this was years ago.
Yeah.
The degree to which they used advanced technology then with robotics, it's only gotten so much better. They have perfected the manufacturing process.
Right. So
You're not going to decouple from that
you don't flip a
overnight.
switch,
No,
right?
absolutely
It
not.
doesn't happen
That
that
goes
way.
back to how the world ran out of everything.